Even though Palantir shares dropped almost 10% yesterday, I believe the company came out of their best quarter yet. Let me explain why. Hey fellow investors, how are you doing? My name is Stijn and welcome to my YouTube channel. Now let's get into it. We have talked about this chart quite a bit on this channel. This is called an S-curve chart, and for our intents and purposes it represents a hyper growth company. Even though Palantir is inching towards 20 years of operations, I believe the company is still on their first horizontal stretch of their growth. After all, Palantir has only just started expanding into the commercial space, which I think will be the main driver of Palantir's exponential growth for years to come. And the most recent quarter shows us the potential Palantir has. Their potential to grow exponentially and give us shareholders great returns in doing so. Let's dive into the numbers. First, real quick, what are we actually looking for? So, since I believe we're so early on the exponential S-curve growth chart, there are only a couple of metrics I honestly care about. First, I want to see explosive revenue growth. After all, this will be the main force behind the S-curve-like growth. Second, I want to see a decrease in cost relative to revenue over time. Meaning, I want to see less operating expenses and less cost of revenue in comparison to their revenue over time. Fancy words, I know, but it just means I want to see cost decrease relative to revenue over time. And the third one, I would love to see an expansion of profit margins. This means I want to see Palantir become increasingly profitable the further they grow. This is actually a result from the first two. If revenue goes up and cost go down, surely your profitability goes up over time. So let's start looking for signs to confirm or deny the first one, explosive revenue growth. The headline numbers say they've grown the revenue with 36% year over year for the quarter, and we are expecting 40% revenue growth in the full year 2021 compared to 2020. So I think Palantir gets full points for explosive revenue growth. Second, decrease in cost. Can we see their cost going down over time? So there are two main parts to cost for a company. First, there's cost of revenue, and second, there's operating expenses, and we'll look at both. Cost of revenue is the direct cost a company makes to sell their product. And can we see a decrease over time with Palantir? For sure we can. $150 million in cost of revenue in Q3 2020 and only $87 million in Q3 2021. That is, even though they increased their revenue with 36%. So their revenue went up while their cost of revenue went down. That is extremely impressive. In fact, in Q3 2020, Palantir had a gross margin of roughly 48%, meaning they got to keep 48% of all the revenue they received as gross profit. By the way, 48% is already really impressive. But Palantir blew the number way out of the water for this quarter. $392 million in revenue while just spending $87 million to get that revenue results in a gross margin of almost 78%. 78% is insane. This is for sure what we like to see. So yeah, they have definitely decreased cost of revenue for this quarter. But remember the second part of the cost equation for companies, operating expenses. So quarter over quarter, but also first 9 months of 2020 versus first 9 months of 2021, operating expenses are down big time. So these are the main numbers I would like to focus on. They spent $1.5 billion in operating expenses in the first 9 months of 2020. And they managed to get that number all the way down to just $1.2 billion for the first 9 months of 2021. So a decrease in operating expenses of 20% while increasing their revenue with 40%. That is extremely impressive. So to summarize the cost part, Palantir was both able to decrease cost of revenue as well as their operating expenses. And that while they were still able to significantly increase their revenue. That is a great sign of stability. This is what tells me that Palantir truly has a durable competitive advantage. Of course, the company is still net unprofitable with an EPS of minus $0.05 per share. But I think we shouldn't really care about that number for now. I believe the longer term potential of Palantir is mainly in increasing revenue, diversifying clients, increasing average client sizing, etc. Net profitability will come for when they are more mature. All tied up together, we're seeing explosive revenue growth with 36% growth year over year and expectation of 40% growth for the full year 2021. And we're seeing that explosive revenue growth with dramatic decreases in cost, with a gross margin of almost 80% now. That is just insane. and combine that 80% gross profit margin with an all-time low in operating expenses, and we get to the beast Palantir is slowly becoming. These numbers are nothing short of extraordinary. I almost cannot fathom how bullish the numbers are for the long-term future of Palantir. These Q3 earnings only strengthen my confidence in Palantir's management, my confidence in their story and their growing competitive advantages. By the way, if you want to learn more about my buy targets and price predictions for Palantir, definitely check out this video. I can tell you since then I've only gotten more bullish on the long-term potential of Palantir, but these projections should form as a nice starting point in your investment journey nonetheless. Just as a teaser, in that video I explained how Palantir might just be able to go up to $300 before this decade ends. So go watch that video. And I think that's about it for now. I really hope you guys enjoyed this video, and if you did, please give it a like and maybe even subscribe. Comment down below what you want to talk about next, and I'll see you guys in the next one. Peace.